Hi, Beach Channel. I'm Max Wyler, and we're talking Bald Guys Finance. And Scott, guess what we got today?
What do we got?
We got a bald guy. and check it out.
I feel it's complete. What? This guy must be a banker or something. What's going on there?
Oh, yeah. Exactly. That's you got to dress.
I've never seen you in a jacket
when you're working on your bank,
except at a funeral,
or when we go for a loan. When we went for the loan for the building years ago, did I wear a jacket?
Does that matter for your prospective clients wear a jacket?
In terms of compliance, it cannot matter whatsoever.
Okay.
Right? You can't, because it's done just based on what their qualifications are.
Yeah.
If banks started to decline people on the way they looked, the housing market would collapse.
And he wouldn't get a loan.
So Ronnie, we didn't give Ronnie a proper introduction, but Ronnie's a banker and a personality and does a lot of different stuff.
Yeah.
On South Beach.
Yeah, definitely. I mean, coming from New York, we just have this attitude of we could do anything, and that's why I think you and I clicked when we met years ago. 25 years, 26 years in banking. This is 4 decades in mortgage banking. So I've seen it all. I've gone through the highs, the lows, the crashes. I came to Miami when Miami rose up out of the ashes like the phoenix, right?
Right.
And it's interesting to see how Miami has matured. I've been very fortunate to see how Miami just changed so much from being, a city that was trying to be something to now a city that is, right
where
there on the
wants
cusp
to be.
of being, yeah.
Yeah, everybody wants to be. So, man, I dressed up for no reason then, huh? Banking, we're talking banking relationships today. So, Ronnie will help us with all that. Our people are trying to develop their wealth plan.
Mm-hmm.
Some of them are independent business people. How important is a banking relationship to all that?
Relationships in life are everything, not just in banking, right? It's being able to pick up the phone to talk to somebody about accounting, about banking, about construction, about, education. Before we started, we were talking about schools and how important that is. And banking is just one piece of the pie. And the same way that you have, people have doctors that they rely on, or people that they rely on to, maybe pick up my kids or sports relationships. Banking is the most important relationship from a financial standpoint, whether it's a mortgage, investments, or just your day-to-day banking and credit decisions.
Especially when you're younger, right?
Yeah, absolutely. Yeah, when you really need that loan, that relationship is really important. But then also as you scale and you become, you may want to do more creative things, these developers and the syndicators, then I think equally the relationship with your bank is important.
Scott's favorite quote is when you're younger, you don't have any money. You got to get it from somewhere if you're going to invest, right?
Yeah.
But when you're younger is really when you need to start, because I see too many people, the big mistake that they make is they don't start their banking relationship until it's too late. And, just in life, it's the same way as taking care of your health. If you start taking care of your health and start taking care of your wealth when you're younger, it makes it a whole heck of a lot easier as, you become bold guys like us.
Yeah. So talk about banking relationship. What's it mean? I mean, Scott and are pretty much debt free now. I still have my 2.5% mortgage, and I'm not going to listen to Dave Ramsey and pay that off early. I don't know why anybody would do that. I think I've repeated that 1 million times, right?
You
Paying
have.
that off?
Yeah.
Would you pay it off early?
I wouldn't.
No. Okay. So
take that
there's
money,
no reason to.
You take that money, invest it, and that's it.
Yeah, make the spread.
Plus, you need some sort of tax write-off. You're a millionaire. You make $1 million a year. You need a tax write-off on your taxes every year.
Dave Ramsey's going to haunt him because Dave Ramsey comes out of the woodwork and says, "Pay off that mortgage. Pay off that mortgage."
Yeah, no.
That in that case, there's good debt and bad debt. But having a good banking relationship helps, first off, get access to funds. And then when you have a good, Scott always says, if you got a good deal, you can get money.
Oh, yeah, 100%. And the other thing, too, about the banking relationship, I'll use this example, is that, it doesn't even equate to how much money you have in the bank. It's having that banking relationship when you go into the branch or you go talk to somebody and they know who you are. I can't tell you how many times that people have, and this is becoming more and more of a situation now where people, they just apply online for a credit card or whatever. It's always good to have a credit card just for that rainy day when you might need it. And they apply online, they get declined. And one of the things that I've seen over and over is that people come into a bank branch, and because they have that relationship, they say, hey, I applied for this credit card, I got declined. And then because they have a relationship with either the personal banker, the investment counselor, whoever it is, they're able to turn that around and get them approved for a credit card. And then over that course of the conversation, oh, you know what? You're also eligible for a personal line of credit. And oh, I'm looking here, I see what your mortgage payment is. We might be able to do this for you or do that for you. Yeah. So just having that relationship, the same way that you go in to see a doctor once a year, having that relationship it's worth its weight in gold.
The one thing that, to that point, that relationship is, we have a real estate company, we have a brokerage company, an investment company, but on the brokerage side, the relationship with our banker is so important.
Of course.
Because if we'll, let's say we refer somebody to a bank and we're able to kind of pre-qualify them and know that, listen, we can get this done. It may take a little while. There may be this and that, but we're quite confident we can do it. It gives us a differential advantage in the brokerage business because, sometimes we'll go in all cash knowing that we've got the commitment from the bank before that, and a cash offer is going to be viewed more favorably than a financing offer on a house. So there's all kinds of ways that relationship benefits,
or what if people always think about just being qualified to buy the house or buy the property or whatever. But by having that relationship, what if people think, oh, I'm only going to be qualified to buy for $1 million, but because you have a relationship and you can have that conversation and discover opportunities, maybe they're really eligible for a property that they really want that is maybe 1.5 or 2 million,
sure,
or maybe 10 million. I don't know.
Well, that brings up one of Scott's things as far as a youngster, your first house or something else. Scott, and I believe that you should buy as big a house as you or a most valuable house that you can get, because it's the cheapest debt you're ever going to get in your life.
Right.
And history says it's going to be one of your best investments. What do you think of that?
I think that, you want to be a little bit conservative. You want to buy as much house as you can afford without overextending, because, banks, all these government lending programs, especially for first-time homebuyers, they'll let them go into crazy debt the same way that they let young people go into debt for their student loans.
Right.
And they'll let them go up to 55, 60% of what their monthly income is to afford the house. But is that really the best thing for them? Because if they're looking to buy the house and then save up money to maybe buy the next house and then convert their original house into a rental property, maybe buying the most expensive property first is not the best investment. I tell a lot of young kids, like one of the things I did with my kids is when they went to college, I bought a house for them.
You did something similar with your electronic, but you slept in the closet or something.
Yeah, no, I bought a house in Coconut Grove when I got out of college, and I basically lived in the utility room.
Okay.
It's the same principle that you're describing. And it's the other thing, and it worked out real well.
Except in August, it's a little hot in the utility room.
Yeah, it was a little hot. There wasn't air conditioning. But it's the same principle. I rented the house out, and basically he paid my entire mortgage except $300. So it cost me $300 to control a $200,000 house in the early 80s. But I like what you're saying with regards to, we see the UM students coming in. The parents are coming in, they're buying houses for their kids. They live there, and they have this disposable income, and it usually ends well. The market's been good, and it's been a great investment for them.
It's the age-old question, rent versus own.
Right.
Is it better to rent or better to own?
Let me ask you a question on the relationship side of the banking. Obviously, you have underwriting, so everyone has to meet the underwriting. What's your credit score? What's your income to debt ratio? All these ratios, but then there's always a fudge factor, right? There's always
leeway.
This person's been with us for a while, and we're going to stretch.
Factors.
Yeah, I mean, what percentage, or how would you categorize or clarify that? Like having a really good relationship with a bank, how much will they stretch for you? Will they, percentage wise? And I don't know if there's an exact answer to that.
Yeah, that's a great question. So, relationship, banks will not go outside of their guidelines from a compliance standpoint, just based on relationship. But what the relationship gets you is that person at the bank is going to dig a little bit deeper, maybe try a little bit harder. Like right now, we're doing a deal right now where the people are moving from the New York area, they're moving down here, they're moving to like Delray. They're buying a home as a second home for that they're going to use for the next 2 years, but they had multiple late payments on their mortgage over the past year. So Fannie Mae, all the conforming loans, nobody's going to accept it. We've gone to every other lender. We're doing it in-house. We're going to do it, keep the loan on our books, because there were compensating factors. First of all, they're putting down $500,000, right? So they're putting down 50%.
Right.
And number two, they have a tremendous amount of income, right? So it just,
Yeah.
and they have like 24 months of liquid reserves, not even just like what's in their retirement, just liquid reserves.
Yeah.
And they have a very good excuse of why they have multiple lates. They were traveling out of the country and their bank sold their loan in between and they couldn't access. Sometimes you try to log on, you get blocked out.
Right.
You can't. That's what happened.
I see.
So because of that, we were able to say, hey, this is the reason why this happened.
Would you do that? And this was a question I had for you, like a balance sheet loan. Where,
Sure.
Is that what that would fall
That's
under?
exactly what
so
it is.
So the bank is going to lend. They're not going to put it into one of these programs. They're going to do it in-house, and they're going to hold on to that loan.
Yeah.
The key of what we're trying to accomplish, despite what Dave Ramsey says, is how good debt makes you more successful and build wealth. I talk about our first 2 years in business. There was a conversion system for European systems where it was $120,000. We didn't have $120,000. We didn't have $12,000. We went to our banker, showed him the what was going on. We had a business and all that. It was tremendous. It immediately created $1 million worth of revenue for 10 years or whatever. That's a home run.
Yeah.
So those are the types of things we couldn't have done if it wasn't about debt. So, there is
I don't care how
healthy debt.
successful a business is or how successful an individual is. You always, like me, I have zero debt. But I have my American Express card. I have 2 or 3 credit cards because you just never know when you're going to use it. And I have a line of credit.
Yeah.
So if a business opportunity comes up or if I need something, I can buy it. I'm not gonna stress it. Or maybe like the market gets a little soft and I don't make any income for 6 months. I could pay all my bills. It's not a big deal.
Are you structured as, let's say, a mortgage lender or mortgage broker to the extent that the bulk of your compensation is based on your lending?
Yes.
Okay. And that's probably more lucrative than being, let's say, an employee.
Salaried employee.
Yeah, salaried employee.
I've never in my life, I'm 54 years old. I know, I look 44 and I live like I'm 34, right? But I've never in my life had a salary job.
Yeah.
I don't even know what it is.
Right.
If I went to go get a job and somebody said, all right, well, we're going to give you this salary, I'd say, what? How am I supposed to live on that? Like, what if I make you more money? I'm not going to get more money on that? To me, it makes zero sense to have a...
I got a question, and this is about the bank that a lot of our audience is young and they're starting out and they're trying to, find out how to borrow money. It is like a national bank, like, Chase or something like that versus, let's say, a community bank.
Right.
What are the differences or what are the advantages of one or the other?
So the federally chartered banks, right, like your Citi, your Bank of America, Wells, Chase, they're very, very rigid in what they do. Okay. And even legally, there are certain things that they can't do that like a community bank can do. Community banks can make loans because part of their structure and part of their charter is that they have to make reinvestment loans into the community.
I see.
So the big box banks, they as well have to follow these CRA loans and guidelines, but not to the same degree as a community bank. And a community bank can do it with much easier guidelines. Like we see it all the time. Navy Federal Credit Union, they have these really aggressive car loan programs and personal loan programs. That's really good for people that, maybe can't document their income in the same way as somebody that's, works at a company and makes $250,000 a year and, their credits, is 780. But maybe these people, their credits are 680 and they make, $70,000 a year, but they manage their debt and, they've got, $100,000 in student loans and they want to pay off the student loans and their payment's going to go down by $1,500 a month. Some of these community banks will make that loan.
I see.
Whereas the big banks will just look at it and say, yeah, no, not for us.
Yeah.
One thing that we, in our real estate practice, in our brokerage business is the appraisals. And, it's important to have, the right appraiser, let's say, someone who's really familiar. Like you mentioned, you did it alone in Coral Gables. We sell a lot in Coral Gables. And it's a different market. It's a very, you could have two streets that are relatively close to each other, but the pricing is substantially different.
Correct.
And so we really are conscious of making sure that the appraiser is aware of that. And sometimes when we go with larger national banks, maybe from the Northeast, they'll send someone in who's not familiar with that area. And it creates a higher risk or higher probability of that property not appraising. It's just something that we've noticed. And so when we deal with buyers, we try to align them with banks that we know have and will execute in the specific markets that we work in, because it increases our probability of making the deal.
Well, that's your relationship with people who understand your business.
Yeah, and that goes back to your original thesis of the relationship with the banker, knowing what they can and can't do. And at the end of the day, it's like increasing your probability of execution.
Well, that's kind of like one of the other things what I think a bank relationship is important of. My banker introduces me to people who can use my services a lot.
Yeah.
Yeah. They say, I know somebody who can help you with that. And I'll introduce, they'll call me sometimes. Somebody who do you use for insurance for a show or something?
Yeah.
They'll do stuff like that. So that's part of
and
our
knowing
network.
your banker as well, because they know your business, they understand how to pitch it to other people, because let's face it, your banker, and I always laugh at this because I see a lot of people's bank statements and their credit reports, so you get to really intimately know people. And if your banker knows the level of business that you're at, they're going to introduce you to people that are at the same level of business that you're at. They're not going to introduce you to somebody that's looking to do Instagram videos when you're an award-winning, you run an award-winning video and movie production company. It just it goes back to what I said before. Relationships, having those relationships are just as important as everything else in life.
So should we take a comment?
Sure.
All right. So these comments have been rough, man. All right. I've been getting killed on these. So let's see. Can you all do a show about how to teach kids how to save and handle finance? Victoria K, Delray Beach, Florida. I think we kind of do.
Yeah, we talk about that.
I definitely talk at that level. I don't know if you do, but I talk at the kid level.
And I think we talked about the $1,000 and what that's going to do to this next generation of younger people.
It's like we were talking about, starting young.
Yep.
If the younger that people start, and even what we were talking about buying a multifamily house as your first investment out of college, that's. People don't think of real estate as being a way to save, but it is a forced savings.
It is.
And the best part about it is, if you invest in the stock market or invest in crypto, these crazy kids, it's too easy to access it and take the money out. If it's in real estate, it just grows because you don't have access to it the same way.
And you're not looking on a daily basis what your value is. The thing with the stock market is every day you're getting a scorecard. You're
getting alerts on your phone.
Look what I made. Look what I lost. Look what I made. With real estate, you wake up in 3 to 5 years and chances are you've gone up 10, 12% a year.
I'll tell them not to look at the market sometimes.
Yeah.
I know.
Well, I don't look at the market before 12 o'clock. I mean, that's the one discipline I put in place. But I think real estate is more of to your point, more of a savings vehicle.
Exactly.
That's, longer term.
And what I've seen some people do, I know we're doing comments, but what I've seen a lot of people do is instead of taking one of the loans that we do, that's a really good loan, is we do a pledged asset loan. So if people have a lot of money in the market, instead of liquidating that or taking a margin loan, they put that into an account with us, and then we can write a loan against that.
That's
so
good.
they don't incur a tax event by cashing out and selling an asset or cashing out their 401k or their IRA. And it's going to keep on growing at the same amount. We're just changing where it is, so we have a lien against it. Simple loan.
Yeah.
I'll do one more because that first one kind of stunk. Is Christian McCaffrey related to you, Scott? Sid T. Norton, Kansas.
Yeah, that's my nephew.
All right. Yeah. Well, I don't know where that came out of. We never mentioned that before.
Well, you're about the
show.
same height as Ed McCaffrey, right? It's Christian McCaffrey's dad. So.
Yeah.
No way. Ed's tall.
Christian needs a good banker.
He needs a good banker. I think he's all right with all that.
I think he has enough money in his contract. He could be his own banker.
Yeah, exactly.
Yeah. All right. So, back to let's recap on the banker relationship thing and all that. It's been
Sure.
important to you. I know that on the stuff that we've worked with, your bank relationship helped us a lot.
Yeah, I think
Especially early
everything
on.
that
and
was.
we did a
yeah,
credit union the first time.
We did. Yeah.
Yeah, that
Credit
was-
unions, I found oftentimes can be more competitive on the banks. Their underwriting is a little more stringent. The community banks I've had good success with. There was a period where we were buying single family homes, 1 or 2 every year in the Gables, South Miami area, and I was doing that with a line of credit.
Were you doing fix and flips or what were you
No,
doing?
just pretty much covered land plays. Where
Really?
we were
Okay.
buying
So
these
you're
things,
land
renting
investing.
them out. If they broke even, we would pull the trigger.
Yeah.
But the idea was to accumulate a portfolio of single family homes in an area that we lived and liked and felt was going to go up. And we still have some of those houses. We started buying them in the 90s.
Oh, wow.
Scott hasn't sold. He just recently had his first sale in 40 years.
Yeah,
Your warehouse or whatever.
Yeah.
Yeah,
Bought some
so-
warehouses
Land
in the
banking.
90s.
Yeah.
And now what's happened is those properties have become income producing properties because the rents have gone up so much. And to your original statement about what's going on in Miami, I think even a weak investor could have looked very bright if they had invested in South
It's like
Florida.
just throwing a dart at the stock stock
exactly.
market,
Yeah.
in the past 5 years.
But
you
you
were
have
pretty
to
good.
go to the bank. You have to, you have to ask for money and you have to be able to execute those deals. So, we were watching investors buy and do fix and flips and make good money. And my wife and I were both working at the time pretty heavily, and we didn't have time to do the fix and flip, so we just accumulated. We bought our house, our primary residence, at the peak right before the 2008 crash.
Oh, wow.
And we didn't get a discount, but it was the house that we wanted, and we were able to fight through it and meet all our commitments. And looking back, it was a very good investment.
Yeah,
I
you
had-
got fired at the time, and you had all the other things.
I had the perfect storm, when all of that happened.
Crushed.
Stretched for this house, and yet having the ability to weather the storm and hold on to it. Now it's one of the better investments that we've made. And so,
Yeah. Well, we're
Aren't you
running out
glad
of
that,
time.
you're glad that you hung on to the
I'm
house?
glad
though.
I held on
So
to
a lot of
Yeah.
people,
Yeah.
they cut bait and they ran, and
Yep.
then they're like, oh,
Scott never sells. Never sells. He's not a seller.
guy still got his communion money.
Yep, he still does. Yeah. So let's recap. Banking relationship.
Yes.
To my business and to personally, it's been very, very important. I think the stuff that we worked together, it was vital
Yeah.
on the properties that we bought and we refinanced and everything else.
I think
Do you
knowing
see
your
the same
bank-
thing?
yeah.
I mean, you do
Relationship
good
is
things.
everything.
Yeah.
No matter what you're doing in life, your relationships are everything. Same way that you called me up. Hey, what are you doing? Blah, blah, blah. Like, relationships are everything in this life. And that's why you never burn bridges. That's why you always try to, talk good to people and leave off on good terms. You never want to burn that bridge. And you want to deepen that relationship and because you never know where it's going to go to.
Yeah.
Or when you're going to need it.
Yeah. So
And it's an asset. To your point about if your banker knows you more than just a number, they're going to look out for you. They're going to help you. They're going to refer you business. You're going to do the same thing for them. The course of, let's say, transacting a sale of a single family home is going to go a lot smoother if you have someone that you trust, that you've done business with before. They're going to know where the loopholes, they're going to know where the blind spots are. They're going to address all those things. And so your probability of executing that deal go up substantially.
it's like any other relationship too. You don't force it. If you're in one and you don't feel like it's happening, try something else, right?
Correct.
Find one what works.
Sounds like my dating life.
Well, we'll leave it at that. All right. That goes through thing. All right.
I didn't know there
Channel-
was dating
Huh?
life for bald guys.
I guess.
All right.
I've been out of it for so long. I
You
don't
live in
know.
Coconut Grove or the Gables. I live in South Beach.
There you go.
Yeah. So, all right, B Channel. That's been Bald Guys Finance. See you next time. If you enjoyed today's episode, don't forget to like the video, follow the channel, and leave a comment. Scott loves comments. Watch Bald Guys Finance on the Beach Channel, on YouTube, Spotify, and Facebook. Follow our Instagram and TikTok for more.